There is one method that you can use in Australia that you could potentially pay $0 on any cryptocurrency gains. Sounds interesting to you? Well, today let me explain the personal use asset method. Hello everyone, my name is Ethan Rushok and today I'll be talking to you about cryptocurrency tax again. So it's a follow-up from my video on how does cryptocurrency gains get taxed. So if you haven't checked that one out, make sure you do. I'll link it up above. But today I'm going to be talking to you about the personal use asset method. So this is the one method that you can potentially use and pay no tax on cryptocurrency gains, but it only applies in a few really particular situations. So I want to outline some of the myths around this because it gets thrown around as you don't need to pay tax on crypto, just say they're for personal use. And I want to outline why that is very rarely the case and why in 99% of situations you will be paying tax on the gains. So a lot of what I reference here will be coming straight from the ATO website. It's really simple and it's really stepped out, and you should be able to use a couple of examples on here combined with what I'm saying to work out whether you need to pay tax on the gains or whether you can treat them as a personal use asset. And so the big advantage of treating them as a personal use asset, if it's under $10,000 in gains, then it is tax-free. So it's pretty simple that a cryptocurrency will be treated as a personal use asset if it's being used for personal use to purchase products and services pretty much. So if you think of it, if it's being used like you would use cash, then it will be personal use. So you're buying and selling goods with it. So an example of this would be someone buys some cryptocurrency, say some Bitcoin, and then they go and transact with that Bitcoin a few days later to go buy a pizza from an online store, or they go buy some clothing, or they go into a store physically and use Bitcoin to pay for something. So it's pretty much using your Bitcoin to purchase everyday goods. So a prime example of this that's really relevant recently is within the last couple of days is Elon Musk has announced that Tesla is now accepting Bitcoin for purchasing their cars. So if I turn around and transferred my cash into Bitcoin with the intention that I was going to buy a Tesla next week and the price of the Bitcoin went up in the next few days, I wouldn't need to be paying tax on those gains because I was purchasing those cryptocurrencies for the use of personal use. So I hope that makes it pretty clear, an example of where it may come into fact. And so as per the ATO website, they say it's at the time of use, what was your intention then? So it's no good to say, oh yeah, I'm going to go buy a Bitcoin today because I plan on spending it, never spending it. In 2 years' time, the price has doubled and you go, oh yeah, but that's what I was thinking about doing it. They're going to look at the whole situation. So really think about it. Are you buying it to use soon? So the longer you hold it, the more likely it is that you're investing that money rather than using it in day-to-day life. So there's a few clear situations here, they say, where it's not a personal use asset. So that is when you're buying it as an investment, in a profit-making scheme, or it's being used in a business transaction. So if you hold Bitcoin through a business, those gains will be taxable. Or if someone pays you in Bitcoin, again, that will be taxable. It'll be classed as income. So another way to think about it is when you're transacting in cryptocurrency, are you actually just transacting in cryptocurrency, or are you then converting that cryptocurrency back to Australian dollars, for instance, or using a third-party payment gateway? So I remember a few years ago, there was a lot of talk about, oh, there's an easy way to pay no tax on your cryptocurrency, just pay your bills, etc. with it. But to do that, you had to then go sell that Bitcoin as such to a third-party gateway, and then they would pay those bills on your behalf. That's something clearly the ATO didn't like because they've put it on the website to make it clear that that is not deemed as being a personal use asset. You're holding it and then transferring it back into Australian dollars, and that just kind of goes against it being a personal use asset. Again, they even talk about if you're holding a lot of cryptocurrency and then you might use a small portion of that for a personal use, that will be the only portion that would potentially be personal use because it clear is that you're not using all of it for that. Most of it is for investing. So it's pretty obvious if you think about it, are you using it like you would cash or are you using it as an investment? Now, if you do make some gains, but you are using it regularly as a personal use asset, then any gains under 10K will be tax-free. So that is the way you can pay $0 tax on any gains you make, is if you are transacting it in regularly and it's deemed as a personal use asset. Now there is something to remember here though, is if that's the case, then any losses you make are completely disregarded. You can't then go and claim them as a capital loss like you would if you were deeming it as an investment. So I hope that quick video has kind of summarized the personal use asset. As you can see, there's probably not many situations where it does apply, but it may apply, and I think going forward, it could apply more when some cryptocurrencies become more regular cash flow and people are using them as currencies rather than just investing. If you found that video at all helpful, make sure you hit that subscribe button, hit that like button, and I'll talk to you again on the next video.